Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday. It is the 20th of May. We started off with a little bit of a gap down, as probably not that big of a surprise. We probably figured it was going to gap a little one way or the other, right? So 50-50 shot. Tech really hit hard here today. Probably more so than any other area. And good morning, Lloyd. Good afternoon, Jimbo. Great to see you. Welcome out, everybody. Hope you guys all had a fantastic weekend and ready to rock and roll another week. And then we'll have a short week next week with it being Memorial Day. Always weird when the market isn't open Monday through Friday. But hey, we got a week before we get there. So hey, Pascal, great to see you, my friend. And good afternoon to you, Patricia. Taking a look really quick at kind of the day that was. We're light on earnings. As you guys know, we're out of earnings season. We do have a few big name companies, or at least S&P companies, AutoZone, Home Depot, Kohl's, and the TJX companies all reporting tomorrow before the market opens. No huge names reporting here tonight. So handful of names here before tomorrow's opening bell. Pretty light. I was just kind of going through, as you guys know, I kind of go through every afternoon. I'll kind of look at the top gainers, top losers of the day. Utilities tried to break out today. I don't think they were able to cleanly close the breakout point, but they did give it a shot. And there were around 25 S&P 500 companies that hit new 52-week highs today. As you can see here, 14 of them were in the utilities sector. These are definitely is an interesting space for potential breakouts. We've talked about this quite a bit in a variety of places, but as you can kind of see, seeing some things, knocking right into resistance or already have broken through resistance, utilities certainly could be an interesting place if we can actually get that breakout here this week. And good afternoon, Andy. Great to see you. Hello, Amy, Whitney, Thiago, Micah, Tanner. Always a pleasure, guys. Hope you are all doing fantastic as the market volatility continues to be at the forefront and will continue to do so. Today it was just the Hawaii story. It can be about anything, right, in these market conditions. Taking a look at the S&P on the 15-minute time frame, gap on the open, we're able to recover quickly. We've seen that many, many times during this. The bulls are still certainly putting up a fight, no matter how you want to, wherever you lean, it's going to go bearish or bullish. The bulls certainly have been resilient, but we really gave that back throughout most of the trading day. We did catch that intraday support level the last hour of the day, had a little bit of a, pop, probably some short covering, maybe some buying too, who knows for sure. But we have established a little bit of intraday support, which of course is going to be today's low. Pretty easy to notice there. On the hourly chart, things aren't looking particularly bullish either, but we are holding that little support level. But as you can kind of see, when we look at that 15 or we look at this hourly time frame, there really isn't a lot of support. If this low gives out, heck, we know anything can happen in this market, right? But technically speaking, if we do break this support level, there's really not a lot, in my opinion at least, until we work back into that 2,800 range, which I consider our primary support personally. So now we're kind of using today's low along with, Thursday's low and Friday's high as kind of those short-term resistance levels in the overall market. I actually kind of like how this develops from a technical point of view, and you're going to see a lot of this in the different sectors on a ton of different stocks out there. We didn't, during part of the pullback, no one really knew where support was, right? Is it the 20? Is it the 50? Is it the old breakout point? Is it 28? We're making, can make educated guesses, but until it stops going down and starts going up, we don't know for sure, right? Well, now we do. Now we know that buyers did come in off of approximately 28 on the S&P, cleanly bought it up. And the same thing now on the resistance side of things, at least in my mind, we know that this high at 28.90 is our resistance level that's kind of sitting on top of us. And good afternoon, Scott. Great to see you, my friend. So these two areas, in my opinion, have become very important from a technical point of view. If we give out here on this support zone at approximately 28, I think you have to say that that is a bearish signal. In that scenario, we've made lower highs and lower lows. Hard to make a bullish case there. And while we have a a little bit of a 200-day moving average, somewhere, not too far below that. Support wise, we really don't have a lot until we get into 2720 or so. So there is some room to the downside in my mind if that support breaks out. On the other end of it though, if we can hold this support and either come back and test it and W or double bottom type of a deal, or create a higher low and work back through that resistance, that should be a pretty decent little bullish signal. So in this little area right here, basically, I'm saying anything can happen, in my opinion, in between this 2800 zone and this 2890 zone. If we can take out either the top or the bottom, and we will, right, sooner or later, that will of course happen. I think that will be a signal to that direction. So for more directional style of trading, that is certainly what I will be keeping an eye on. As you guys know, I've been more, theta out of the money credit spreads since this pullback really kind of started to pick up. Over in the Dow Jones, decent little candlestick. We did create a lower high and a lower low, very similar to where we find ourselves in the S&P, where we have a pretty, at least in my mind, a pretty identifiable level of support around 25.2 from the support point of view. And, I think we can probably call it 26 on the Dow, even though that's not exactly perfect. That doesn't line up exactly with these highs that were closer to 25,950 or the old resistance zone. We've seen this 26 be in play on the Dow a few times. That's where all of our moving averages, or at least not all of them, but the 50 and the 20 are going to converge. So I think 26 will be the resistance level to be keeping an eye on there, but very similar to the S&P. When we come out one way or the other, I do think that's a signal. And Ilka, hey, welcome out, buddy. I saw your tweet. That was good stuff. If you guys didn't see Ilka's tweet, you got to go check it out. He put together a really good tune for us here at Tackle Trading. I think we all got a kick out of it. You're a pretty creative fella, Ilka. But that was a pleasant surprise to see. Yeah, if you haven't had a chance to see it, I would check it out. It was pretty darn impressive, sir. So over on the NASDAQ, very similar, but in some ways some different. Now, this, with tech really, kind of at the forefront, at least, one of the areas at the forefront of the tech wars here, or the trade wars, I'm sorry, it's a little more volatile, particularly those chip makers. You guys know that. We've seen that. You've talked about it in lots of places. We should probably expect that to continue to be the case, which will probably lead to a little bit more volatility in the technology sector, at least until a new storyline comes along, right? Like Coach Mark said today in the halftime report, this is, I don't know what numbers he used, but this is, story number 17 out of, 400 that are yet to come or something along those lines. And I think, we all know that that's the type of market conditions that we're in. And hey, Emily, it absolutely was great to see you. As always, again, we can kind of look to this low, but I think honestly, for me, 72 is where I have support on the NASDAQ. So even though a break of this support level, I would call it bearish signal, I don't think that would be the same bearish signal that we'd be seeing on the Dow or the S&P if we break that support zone. On the other side of things, now 76 becomes pretty darn important. We talked a little bit about this on Friday. Concerns were, does this look like a bearish retracement? And if it did to you, it probably still does. And if you were, I could see the argument. I don't know how I feel about it like I was. Nothing really has changed my opinion whatsoever. And I don't think anything really technically has changed enough to get anybody off of what their stance may have been. We can look at the break above this, and I think that's where we have to go now. I think we have to go back up to that 76 as resistance going forward. I still am keeping this old support zone or closer to 72.40 or 50 kind of as the support that I'm keeping an eye on. But I think we need to be aware that volatility is not gone away. And if we forgot, which we didn't, but if we did, this morning was certainly a reminder of that. Then over in the rut, working all the way back down into support off of Friday's very steep selling. And again, bearish retracement. You could see the case certainly carried through here today. We did hang in there at support. We're able to hold up here on the rut today. If this does give out, my concerns from just a purely technical point of view, or at least the bullish side of it, would be there's really nothing until we approach 1500, in my opinion, to prop us up. If this support zone does give out, I would expect more selling, at least short term, in the rut. I do expect 15 to put up a decent fight if we test it, but much like the other indexes, if that gives out, that's not pretty in my mind. On the other side of things, because we had that upward movement last week, we established a high. We've seen downward movement this week. Getting back above last week's high here at about 1565 could be the signal that there's another run to the 16. So right now, I think for the most part, we look at the indexes, we're kind of in no man's land. We're just between support and resistance, where it's a tougher directional type of a market, at least broadly speaking. Now, there's still great trading opportunities out there. We talked about UNH last Friday. They broke out here this morning and just kind of kept on running and running and running. One of my favorite patterns personally, where you have the very clear top, creating those higher lows before finally pushing through or failing and breaking the trend line. It's just one day, but one day in this market's not necessarily the worst thing that we can get. So still in a fairly volatile market conditions, I think is the best way to look at things. Over in the material sector, a little bit of a concerning place where we ended. Now, we didn't take out the absolute lows, but we're kind of knocking on the doors of those few intraday lows. And other than that one intraday tail, there's not much left to hold us up after that. Still think we need to be very careful on this within this sector. I do think it's fine to be open to things, but in my opinion, they have to be, and it's going to be a little more work for Air Products today than it was looking on Sunday night, but I'm still looking at breaks, within this space, and a lot of these more these spaces that don't look maybe quite as well behaved as they should be, which is many of them. Those will be the type of setups that I'll be looking for. This continues to be a mixed, but now I think we're starting to skew a little bit more to a mixed to the bearish side of things. Of course, we all know the story of Dow DuPont. It's just continuing to struggle. Lynn holding in there, but did see quite a bit of selling here today. Echo Labs kind of hanging in there on its 50-day moving average, but you had a Sherwin-Williams here that kind of took out, its little support zone, has a 200-day moving average maybe to prop it up, but if that gives out, I don't see a lot of support until 410 that anything might catch it. We just looked at APD, so they're still looking fairly intriguing to me. Broke down on PPG. Of course, we've already broken down on LYB, a week ago. IP, another big breakdown here today. Caught this one early and threw it out on the Tackle Twitter for anybody who likes to join us over there. Was it Newmont? One of the mining companies is really knocking on the door. Okay, so Newmont's already running, or Nucor, and Newmont is kind of in a retracement. So it looks a little bit more skewed to the bearish side than the bullish side in my mind. That breaking of that support at 54, I do think is a signal. It's not particularly clear because of how choppy we have been in this zone. I don't know if I should call this a break today or not, to be quite honest with you. I could see a case on either side of it. But if we do see much more selling, that is going to start to break, be breaking 50-day moving averages, or going to decent, more deeper retracements in some of those upward trending stocks. Of course, some of those guys that have already started to struggle or broken through support probably wouldn't do them any favors either. I think we have to be careful. I think we have to be looking a little more bearish than bullish. If I'm looking for the bullish signal, much like the rest of the market, I'll just steal this because that works. It's going to be above these highs from last week. That's really going to be the signal from a technical point of view, in my mind at least, going into pretty much everything this week. Over on the energy side of things, another day just hanging around. More and more tempting for the old K trade. I was thinking about the old K trade. If anyone's not familiar, I know most of you guys probably are, but the K trade's basically, if it breaks to the downside, I look to go short. If it breaks to the upside, I look to go long. Exxon kind of an interesting candidate for that, because much like the sector overall, it's developed a very consistent range. I'm not sure if I'm there yet, and I still believe a break to the downside in the energy sector is a better signal than a break to the upside. You always trade what you see, and that doesn't mean I'm right. So another day hanging out in the range, give me opportunities to think about, hey, if it does break to the upside, does that mean anything to me? If it breaks to the downside, what does that mean to me? So decent opportunities are lurking, in my opinion, in the energy sector, just not yet. It's not ready to make a decision. as of right now. The longer we hang out in that little range, I think the better. When we finally do break, the longer it takes to break out, I think that presents a better trading signal personally, as it kind of gets pent up, if you will. Over in the financial sector, pretty decent little day. Not a beautiful chart, but as we've kind of talked about quite a bit, held up a little bit better. One of the sectors that still, at least to my eyes, looks like it's still in an upward trend. You had Aflac hitting the hitting a new high here today, continuing its breakout. Some of the banks aren't looking great, but they're not looking terrible. We looked at some of those support zones at some point last week, and for the most part, they continue to hold. Berkshire Hathaway still looks pretty questionable, but it's hanging at support. JP Morgan and Bank of America kind of have these little support zones that they built last week, but at least as of right now, started to push back up. If we can get a little bit more momentum and kind of catch back up with that 9 EMA, there might be some things out there. Of course, American Express knocking on the door of a nice little potential breakout, probably depending on your rules, could even argue that it happened here today. Chubb, another one, threatening on a breakout. So while the banks don't look great, still to me, they don't look terrible, like, oh, that's certainly doomed to fail. It might, but it doesn't look like it's doomed to fail. So still an area that I like. I think maybe I like it a little bit more than some other people I've talked to. I don't think anyone's super bearish on that sector, but it is one of my personal favorite bullish sectors right now, with the way that it has been able to hold up. Continues to be the case after a day of just kind of back and forth, not much. We're able to close in the green, one of the areas that we're able to do that here today. Over in the industrial sector, continues much like materials to be a space we got to be pretty careful. Unlike materials, where these guys are behind materials from a technical point of view, in my opinion. We could argue whether materials broke down today or not, but it's very close. Whereas in my opinion, at least, we can't have the same debate until we break this 73 over in the industrial sector. But showing some signs of weakness, lower highs, lower lows, still struggling with those short-term averages. Not a particularly strong place. We saw CAT, really struggling. Maybe if we can, get back on track. Boeing, after breaking down, is kind of right below that breakdown point. So another area looks a little more appealing for those bearish type of trade setups than the bullish type of trade setups, to me at least. Again, above 76, this one's pretty easy. I can have my opinion swayed pretty quickly if we can reclaim 76 within this sector, and certainly if we can reclaim 77. 76 looks to me like it's that short-term support level that's kind of the biggest line above us, along with that 9 EMA. If we can take that out, really not a lot of anything in my mind in the way till we get to 77, which will be a battle, as we've talked about many times before, or at least should be expected to be a bit of a battle. So nothing really has changed. We do have a new number, though, at 76, right? 73 and 77 have really been the big numbers lately, but I think we can kind of throw 76 as a resistance level worth keeping our eyes on going into this week. Over in tech, again, that Huawei stuff really, really hit those semiconductors hard, whether it was justified or not. Who knows? Google was down big. Most of the semiconductors had pretty rough days. Again, is this an overreaction? Probably, or maybe, or it could be, however you want to word that. But we got to go with the price action, because that's the only thing that we know for sure. We did hold up okay. If we look at this on the intraday level, after that big gap, it really did kind of mimic the market, because there are certain areas that aren't going to be quite as terrifying, for the bulls as maybe the chip makers out on the tech side of things. Cisco and Visa and Apple doesn't look all that great by any means. Oh, that's a 15-minute chart. Let's go to a daily here. Microsoft, Visa. I mean, again, one of those things that could break out this week. It probably did us a little favor, kind of the slow little drift to the downside at that top out point. If we were interested in a breakout, at least get a little bit of time to reset, take another run at it, right? But you have things, like Apple that, aren't in that same space, but really pretty questionable. We all know the ugly nature of Intel. I just feel bad even looking at that chart anymore, because like many traders, I do like Intel as a company. So the bigger tech stocks, maybe a little more of a mixed bag than they have been, but not nearly as, in rough shape as, some of the semiconductors here today. Qualcomm down big, big ugly gap, big red candle, Micron, and on some level, many of these chip makers have somewhat of a similar price action here today in response to today's market news. So tech-wise, I'm going to be personally shying away from those, right now, because they really are the type of thing that I should expect anything, and I don't know how, much the technicals are going to help with that huge, concern. And it could work the other way too. We could get excited that it was no big deal. I think we have to be careful over there. Still overall interested in tech. Certainly, I don't like it as much as I do like the staples and the financials personally. It's kind of more on the next level down with discretionary, if you will, but very rough day here today. No price action, giving us kind of that turnaround that this should be the day. We did see a doji, so we did see a little indecision on the bearish side of things. But just like that, we're back below everything. I think at this point, much like so many other things, to get clear signal technically, we've got to take out this high from last week or this low from last week. We've got a pretty significant level of support at 72, but with this support at 73, if that gives out, I would expect 72 to be pretty easy to work towards. So I think, again, this is to get some clear signals. I think we're going to need to let it fight this battle between this, just north of 76 and $73 range before we get a clean signal. I will be looking to the individual, to the more techie and less chippy type of companies from a bullish point of view, though, personally, just to kind of try at least to skip some of that potential volatility if that's possible. So over in staples, held up pretty nicely today, a little bit of a close in the red, but really nothing to see here technically, I don't think. Continue to hold that 57 break, still above all of the moving averages, all of that fun stuff. So everything still looks pretty solid in my mind in the staples sector. We did see a little bit of a pullback. So in things like Coca-Cola, for example, thought maybe we are going to get a little better of a candle, but did hold the 9, had a nice little doji forming earlier in the day, but looks a little bit like a potential pullback. Certainly, at least according to my rules, no turnaround. Tomorrow is the day to be jumping back in candle, but looks more like a pullback than anything else to me. You've got Walmart, not too far away from resistance and holding up nicely. Not a great tradable chart. Procter & Gamble still sitting right above its recent breakout points, just kind of just hanging out after breaking out late last week. Pepsi pretty much holding nicely on its breakout. So still looks like a really solid area, a little bit more of a defensive area, certainly, and relative to tech at least. I think it's more middle ground personally, but certainly more defensive than many of the other sectors. Still think that this is one of those areas that I trust from a bullish point of view to be a little less volatile, to be a little more well-behaved as we continue to work through this trade war volatility. Over in utilities, we took a quick peek at the beginning of 14, I think it was 14 utility companies hitting new 52-week highs today. We tried to break out on the intraday. We weren't able to cleanly close it, in my opinion at least, but we did have that first breach. This was the first time since it got there, in the beginning, right, when it was in that nice upward trend before the sideways market, that we've actually taken out some resistance. Will be interesting. Now, on the other side of things, as interesting as many of these charts look to me, I want to be careful not to get overly excited, because we had the doji just over a week ago, very similar situation, right, at support, right? History suggests that we're going to be working back down to 57 based off of what's been happening within this sideways trending market. So while I'm certainly looking for some breakout opportunities, I think it's important to make sure that I get that break before I start doing anything. Because it's one of those things, if on Wednesday we're back down at 58 or 57, 75, I think we're all going to look back and say, of course we are. That's just what it's been doing for a couple of months now. No surprise that that's what it's continued to do. But hey, we're close enough that it could at least theoretically close above that number tomorrow, right? So if this is an area that I'm interested in, I'm certainly going to take a little bit of time, go through and find some stocks within this space, because, well, hey, you never know when it's going to break out. All you can do is be ready if and when it does, right? So, but really interesting price action going on over there. If we can break through that, I do think that's a good signal. Certainly sideways for a couple months now between 57 and 59. Pretty consistent, a big break above 59 or below 57 if we want to retrace. We'll probably have that conversation next week if we do, but I think both of those can be interesting opportunities when they finally do give us the signal. I think the close is going to be very, very important there. Not that I always don't, but I certainly maybe even a little extra feel that way this week. Over in healthcare, continues to be a back and forth place. Don't really have a great handle. I did really like that UNH. I do think that's a good pattern. When you have that upward move, creating those higher lows, but a very clear level of resistance. That is one of my favorite turnaround or reversal type of patterns. This is a pretty decent development, not necessarily for a trade, not necessarily for tomorrow, but now we've captured all of these shorter term averages, the 9s rising above the rising 20. We broke back above the 50. Not a huge spike in volume, maybe a little bit of above average volume, but not anything super notable. Certainly a nice little development there. So that was a pretty good looking chart. So many of these things look like the sector really could make a sideways case either way. J&J still holding the trend, not a particularly beautiful chart to my eyes though. Pfizer kind of still stuck in that 5,200. A break one way or the other might be an interesting little short-term opportunity, but very undecided, much like the ETF. Merck, very similar to potentially at least we create that higher low. If we can break resistance, could be a little bit of a signal. So just like we talked last week, still a little bit of a weird area in my opinion, but whether you agree or not, I think we have to say it's a little less bearish than it was not too terribly long ago. So do think we want to continue to be careful there. Lilly, one of my favorite, if it wants to keep being bearish, one of my favorite potential setups. I think we talked about this last week, where I don't even think it's going to break that support level that lines up nicely with the 200-day moving average. But if it does, there's not much to prop it up from a support perspective for a little while. I certainly will be keeping an eye on these for my bearish breakdown candidate list, see what happens if and when we do close below that support level. I don't expect that to happen, but it's easy to just say, hey, that's the only thing I'd be interested in. Take a peek at it, see you tomorrow, right? So very, very, a lot more mixed than it has been recently. I think we still have to be careful within this space, because when you look at just the ETF, it still looks like it could really go on either side of things. But again, we do have a little bit of short-term support at 87 and a little bit of short-term resistance about 89.30. A break above or below, either way could be interpreted at least as a little bit of a signal to that side, but still an area that's not particularly well behaved, but certainly has bounced back some from how bearish it was, a month ago. Over in discretionary, again, we talked about the big, relatively speaking, earnings week for this space. We've got a handful of stocks, with earnings tomorrow within this space. Technically, very similar to pretty much most of these areas that or stocks, indexes, and ETFs that kind of rallied last week off of that Monday low. That Monday low is going to be our level of support. That's going to put us right about 113.50, and on the other side of things, that resistance is going to put us right above 117.50, and kind of anything in the middle is the development that kind of needs to happen for us to get a clean signal, in my opinion. Personally, still lean to the bullish side, because again, I don't think that this has broken trend. I think much like the financial sector, this still does look like an upward trend. On a weekly, it's not beautiful, but it still kind of looks like a pullback. On the daily, we haven't put in that lower low. That would be the break of that Monday low from last week, right? That's why those lows are so important, in my opinion. If they give out, well, we've already put in a lower high, and that lower low, well, now that looks like a downtrend, at least in the shorter term. So very, very similar to tech and the communication services, certainly broad market, certainly something that development kind of needs to happen here, broadly speaking. It really is more of a stock pickers market. I think the only real area that I feel it's just dragging us with us right now is the staples sector. I feel like if I'm bullish in staples, I feel like just the strength of the sector is backing me up. I feel a little less about that within the financials, and those are really the only two areas I think, yeah, the sector is what's going to be doing the heavy lifting right now. Over in real estate, very good price development for us if we were interested in a potential breakout. We watched that nice movement over the last week or so from support back into that resistance level, right? If this is your first time with us here, of course, welcome. Great to have you. But on this real estate ETF chart, I mean, this is as high as it's been. This is, the only level of resistance left. A little bit of a pullback. If we can create that higher low, get a little bit of slowdown and start another run, maybe putting together a little bit of a cup and handle pattern leading into that break, maybe say next week, that could be a really interesting chart setup. Now, will that happen? Who knows? We kind of need to, see it simmer down, catch that turnaround candle and work back to resistance. But it would look quite a bit like a cup and handle, which would be a really decent development for a potential break within this space, in my opinion. Just going to have to keep an eye on it. Right now, no reason to think that, that has to happen tomorrow. We did hold those moving averages, so there's a lot to prop us up over there, but really no actual buying momentum to speak of to say that, yeah, tomorrow's the day. It might be, right? We don't know, but I think we're going to need at least a little more of an opportunity for time to pass to see how this develops. But I do think if you were looking at the real estate or the REITs as potential breakout signals, I think you wanted to see a little bit of a pullback. Maybe you would have preferred that it went down like this, because we were, down over 1.5% today. So, it wasn't a good day. Maybe you would have preferred that it happened in 2 or 3 days instead of all at once. But I think the pullback, if you were looking at this from a breakout perspective, was something that you probably wanted. And lastly, over communication services, got hit hard, pretty hard here today. Now, we all know the story of communication services ETF. When it's got Facebook and Google giving it trouble, it has a hard time. Facebook was able to catch up all right here today off of that open, but Google, on the other hand, really was not. And now all of a sudden, not really been lighting the world on fire. We did have a couple of nice bounce back days. Now, know where resistance is. Looks a little more like a retracement, bearish retracement than certainly than Facebook, at least to me. So not a particularly great look. That certainly had an impact here on the sector. On the other side of things, you had Verizon working all the way up on the intraday and testing and even briefly breaking through a little bit of a resistance zone. Really nice pop over there. You had pretty similar type of price action here on AT&T. So pretty decent movement over there as well. So it was a little bit of a mixed bag. Still an area I think you always, in this market certainly, but I think you really always kind of look at the industry groupings versus the sector as a whole. Gaming companies certainly not particularly great. You have my favorite gaming company, games I play, lots of Activision Blizzard games, really struggling here today. You have EA really struggling here today. So continues to be not a particularly attractive space, but certainly not a tremendously unattractive space in my mind either. Still an area where, yeah, I'm open to either side of things if the individual stocks chart is looking like it's a high probability setup. I'm not going to look to the strength of the ETF under even normal conditions, but under these conditions, definitely not. So that's where we find ourselves. We have some pretty good development, from a what happens next perspective. We're just going to have to be patient for it. Right? We've established resistance and support last week. At least in my opinion, we saw enough movement both to the upside to the downside to say, yes, this is support, this is resistance. A break either way should be a signal telling us what's likely to happen next. So now I think our job for the most part is just being ready for that break, which will eventually happen, and not getting too crazy in between. So at least that is the approach that I plan on taking as we work through this upcoming week in the market. Over in the volatility index, a little bit of a spike here today, a little bit of a gap down on the open will do that. Again, really to me, the VIX is not telling me a tremendous amount that I don't know. Volatility is high right now relative to what it was throughout most of this year. Not much has changed, and certainly until it does, I will continue to assume that it's going to continue to be volatile tomorrow. A little bit of a doji type of profit-taking day here on the dollar index. Not a huge surprise. If you look at this on the weekly, that kind of puts us right at that body. We've talked a lot about the body and then the top of that candle after the original break. That makes sense. That's kind of what I want to see it get above before I start looking at this from a position or swing trading perspective. But we're holding up there, and I do expect it to give it an honest try to break through. That would be a decent little signal. Certainly a really nice signal if we could actually take out the tops on those on these few days that we tested on the intraday as well. Support-wise, I think you have to call it 97. That gives us our swing low. That gives us the 50-day moving average. Any selling off of this, I'm just going to look at it as some profit taking, not a bad thing. Wait for it to take another run at that resistance. At least as long as we're holding this 97, we're holding the shorter term trend. We have broke, we just haven't held as of yet. Over in gold, doji day after a little bit of selling the second half of last week. Still not a lot to see here in my opinion. A little closer to support. All right, we do have some support there. I could understand the argument to the breakdown side of things. I don't even know if I'm going to like it very much, but I'm open to it if we do take out these lows from April here. But that's what I'm going to need to see. So not a lot has changed. This 1267 as a support, and now above 13 as our resistance. Still a very messy area for a swing trader in my mind. The intraday traders probably have a much different opinion of gold as of late. We have kind of built a little bit of a floor and then broke down, had a little floor and then broke down, had a ceiling and broke out. So intraday wise, there are definitely opportunities in the metals market and gold in my mind in particular, but swing trade, same boring me, still don't think it's a great area to be trying to trade. We are kind of trapped with a little bit of bearish momentum within a support and resistance zone, and it's hard to predict which way it's going to ultimately want to break. Over in silver, a little bit of a bounce back day. This could be an interesting area, interesting first day for a potential trading opportunity, either in the form of a bearish retracement, maybe back into that 1450, into this falling 9, so we get 2 or 3 more days, and then start to see some signals. Could be a retracement opportunity, or maybe we build a little bit of a floor over the next few days for a potential break to the downside. We still are just one day into it. I don't think there's anything based off of this that you could say you absolutely, technically says that you should do without a doubt, but a little retracement or a little bit of a consolidation followed by a break. We certainly have bearish momentum over in silver. I think that it's not up for debate whether you think there's a bearish play in the future. That one's a debate, but I don't think you can say that it's not got some bearish momentum going on right now. Probably the most fun chart and most impractical chart these last couple of weeks for me has been natural gas. Of course, we've been watching that 50 daily moving average and that 9 weekly. Dojied at that here on Friday or last week on the weekly. One day in. Let's not forget that. But we're above it currently. We're above that 9 weekly, and we are above currently that 50 daily moving average. So far so good. I still believe that if I'm a retracement trader, I like where we're at price wise now versus where we were a couple of weeks ago. I don't think there's confirmation, in that scenario, but there's now room to the downside between where we are and where support is at approximately $2.50. But I think you have to like the start to the week, pushing through that, starting to show some decent, at least some bullish signals, are starting to develop over in natural gas. It's going to have a lot of work to do, and there's a lot of week left. But day one, we were able to do that. On the other side of things, from a bearish point of view, if I am looking at this kind of as from that weekly retracement perspective, at the very least, I need to give up that 9 EMA on the daily chart. That has to happen before I would want to be bearish. That's just been support ever since we kind of reclaimed it a week and a half ago, right? So certainly something that we can keep an eye on over there. A lot of fun to watch. Not been very practical though. So I wish I would have trusted that support more, I guess, is the only thing I can say. But I don't feel bad about it either. It wasn't like that's a major 250 support zone, right? So playing it safe is not a bad idea in my mind. And lastly, over on crude, little bit more positivity as we see a little bit of buying, still a little bit more volatile, but we've now again captured that 20. We've captured that 9 EMA. We closed here above this old 63 zone. So if we go into maybe a 2-hourly chart here, and we did have a lot of history in that $63 range. So it looks like the bulls are kind of not super aggressively excited about this retracement, but they have been slowly working in as the last week or so has gone by. This zone where we're at right now, I think we should keep an eye on it. Just because it was an old support zone on a couple of different occasions. Some downward movement there might think, okay, a little pullback might be in order. As long as we're above 60, I will look at this through bullish eyes, though. Personally, think today is just a little bit of a step, not the greatest close. Would have liked to seen a better candlestick to start Monday, breaking above that 20 and that $63 mark. But we did close above it, so I can be greedy all I want, but we did at least here today close above it. I'm going to be watching that 9 EMA to kind of act as that short-term support zone for me as we're moving forward. I don't really see a lot of resistance. I mean, this is what's kind of weird about the crude chart right now. It looks very much kind of like a textbook pullback, and until we start working back into that 66, 67 zone, there's just not a lot of significant resistance. There's always going to be a little something. Right now it's the 63, right? Last week it was the 62. Nice thing is, if we can claim this 63, there's really not a lot until we work it closer to 65. This is kind of the space that we have to work. And yeah, absolutely. I mean, this can be one of those areas that the volatility can hit you up on crude. There is no two ways about that. I'm trying not to get too worked up about that because what's the point? But if I want to be a little more on the conservative side, I might be looking at a little more boring things than crude oil. Certainly not been a very easy pullback to trade into. Certainly those concerns out there are on the market's mind. Whether they're real or not doesn't even matter, right? The market cares about them right now, and so we have to take that into consideration. But I'm trying not to let that get me too crazy. I'll just knock position sizes. I'll turn to out of the money credit spreads to trade swing trading positions that way. I'm not I'm not going to try to let the market drive me crazy with the volatility, because it can. You guys know me. I like as boring of a trading life as humanly possible. So while I like spikes and volatility from a premium point of view to sell options, that's about the only thing I like about it. I love a market that's just doing nothing. So no surprise that the staples and the financials are the areas that I'm liking the most, right? They're holding up, relatively speaking, nicely, but they're also not quite as wild of rides, as a general rule. They could be, but certainly they haven't been, at least as of yet. Yeah, and crude has been a difficult chart. It hasn't been quite the pullback. We got greedy. We had the first week where it really lined up. It was last Monday. Monday was really threw this off. As funny as that is, that's kind of what threw it off. If that day hadn't happened, I think it would have been a little easier to get into it if we just would have pinched just just for that extra day with that 9 EMA. But can't control how it goes. You just have to react to it. But I do agree with you, Whitney. It's not a beautiful technical setup by any stretch of the imaginations. And there are some good ones out there. We looked at UNH, and I know that's not everybody's kind of pattern, but DRI, breaking through resistance here today. Nice close above resistance. We looked at IP breaking through support. So there's breakdowns out there that are either knocking on the door or have actual confirmation. Now I just need some continuation on tomorrow's open. CMG here, broke out on the intraday, but wasn't able to claim it, at least in my opinion, but knocking right on the door. So there are still some very appealing candidates. And I think right now we just have to look at it kind of as a stock picker's market. If an area concerns us, we say, yeah, I'm just worried about that area. there's plenty of options out there. If I'm thinking, hey, who's a good breakdown candidate in energy? Well, Apache here with some support, kind of holding it up, might need the sector to break down, but that's an area to do that. But you have other areas like CVE continuing its break from Friday, NTR continuing its break from Friday. Old ELF here, I think you could argue, triggering into a bearish retracement after this weird earnings gap, a little bit crazier than a lot of people like. Still love a forward breakout. Just have to wait to see if it ever happens. So, good breakdowns. So there's still great opportunities. Tap, another one we've talked about here before, breaking down and just kind of hanging around with the market. So still lots of opportunities out there in my mind from a bullish and a bearish perspective. Make sure, we're open to both ideas. Try not to be reactionary. I know sometimes, I don't know about you guys, I check the futures market, it's down, thinking, oh, what's this going to do for the day? Try not to react to it, but my brain goes where it goes, right? And so, trade what you see, keep your risk tolerance where you want it. Remember that, in this type of a market, things are going to move, and every directional trade I take, no matter how great that breakout on DRI is, if the market, is going to have one of those weeks, fearful of the trade wars, a good chance that, right or wrong, DRI is going to get drug along with it, right? And that's just the reality that I have to face. If I don't want that reality, I can just wait it out. We've got a little bit of a range developing, right? From a broad market perspective, at least I think we do. I can wait for that. There are other areas out there to be looking at. So I'm excited. Should be a fun week here in the market, a little more volatile. I'll be ready for it to be boring again when that day comes, but certainly keeping us on our toes, keep things interesting. So ladies and gentlemen, that will do the market recap today. But certainly, as always, you guys, it is my pleasure. Thank you so much for joining me. Great to see you again. It was a fast weekend, but they usually go that way. It'll be a fast week too. That's usually how that goes too. So of course, if you are new around here, do be sure to subscribe to the channel and hit that notification bell. You're, of course, welcome to join us over at Tackle Trading on Twitter as well. You can find me at FrankMartin23 on Twitter. If you're ever looking for me, you guys know the drill. If you're a pro member, awesome to have you. If you're not, you're certainly welcome to join us. We've got a 15-day free trial. Be happy to let you see what it's all about. Still got some really interesting setups in the stock and the options report upcoming this week. At least I think they're interesting setups. So we can get you hooked up with a free 15-day trial so you can see what it's all about. Of course, you're also more than welcome to join us in our clubhouse. Just another place where we can talk trading. And well, there's one thing I know, and that's traders love to talk trading. So anywhere we can do that is not a bad thing. So you're very welcome, guys. As always, it is certainly my pleasure. I appreciate everybody's time. It's a lot more fun to do this with you guys than on my own. So thank you so much for joining me. You guys have a fantastic Monday afternoon. I will be doing our onboarding webinar this evening, welcoming any of our new team members in. So that's always fun for me. So if you're brand new, maybe I'll see you over there. If not, I will see you same time, same channel here tomorrow afternoon. So thanks again, everybody. You guys have a fantastic Monday night. I will see you tomorrow.